Hi there, this is Mr. Evans. In this video I'll be introducing the finance unit. So this is unit 3.5. It's called Decision Making to Improve Financial Performance. So the emphasis being on decisions that managers can take in order to improve the financial performance of a business, and we can look how we define financial performance as the unit goes on, because there's lots of different ways that you could conceivably measure that. This is just at the top in the specification. This is what AEQA said that you need to consider while you're studying this section of the specification. It's similar to what they write on the start of the other units, but developments in technology and how they're affecting finance. So for example, crowdfunding, different way of funding a business, that's a recent development. Market conditions and competition, I think that's pretty standard across all of the units and how that affects financial performance. Ethical and environmental influences on financial decisions. So is it right to try and maximise profit if it's going to mean using materials that are damaging to the environment, or paying your workers less than a living wage? Just to skip to the final one, the interrelationship between financial decisions and other functions. So really important to remember that we're studying these individual units, but every time you're thinking about financial decisions, well, that might have an impact on marketing. If you decide that you're going to try and cut costs, how will that affect the operations of the business? So just before we get started in the unit, there are two different types of accounting it's worth just being aware of. Financial accounting is concerned with keeping records of previous financial performance for the purposes of review and the adherence to legal regulations. So every year a business public limited company publishes an annual general report, which includes income statements, their income statement for the year, their balance sheet. These are documents that they need to prepare largely for external people and largely about past performance. The bit of accounting that we're going to be more interested in this unit is management accounting, which could be defined as the use of financial tools to enable better decision making. So what are those financial tools that we will be discussing? Well, budgeting, break-even calculations, return on investment calculations, cash flow forecasting, and ratio analysis. Financial accounting is concerned with the past and recording data that's happened. Management accounting is very much an active process of kind of setting targets for the future, using data to try to drive better decision making. I'm not saying that they don't use past financial information in management accounting. In fact, they do, to help them make better decisions in the future. But management accounting can be considered as more forward-looking and more developmental for the organisation. So just to show you the overview, this is how I look at the AS business course. We've got what is business up here at the top, kind of outside of this triangle that represents a business. Then we've got the management, the leadership and the decision making, and our different functional areas, marketing, operations, finance and people. All of these will have an impact on each other. So finance, as I said, set a target of cost cutting, for example. That could well affect the operations department. So if you're talking about these kind of financial decisions in an exam question, it's worth remembering that it's not just finance that's going to be affected, it will be the whole organisation.